Awesome. We're back with another Walk podcast. We've got Brian Vieaux on today. Brian from FinLocker. Brian, thanks for jumping in. You and I know you. I've met you years ago. We know of each other through a lot of mutual connections, but I'm excited about this one for a couple reasons we'll get into in just a second. But I think I told you and I were talking offline a little bit. We don't do this as a commercial for anybody's company,
Right.
but I do. Tell me a little bit about FinLocker for those that don't. First of all, awesome name. I love the name FinLocker. But tell me a little. Give us the 30. I love this. So I need a hoodie. I'm gonna have to ask for one. Get me a hoodie. But tell us a little bit about the company.
Awesome. Well, thanks, Eric, for having me. Been kind of a fan of what you guys are doing here. And yeah, we go way back. Back when I had dark hair and no gray in my beard. So
is that what startups do?
Yeah, this has nothing to do with mortgage. This is all about a fintech startup. So
that's right.
Yeah, so thanks for asking about FinLocker. I've been here. It's crazy. I'm going on 2 years here at FinLocker. And the company was founded 5 years ago or so. And it was a point solution at the time that they were working on solving for, really digital asset verification. That was kind of the solution that FinLocker sought to help lenders with, kind of that middle of the mortgage application, help processors and underwriters be more efficient with asset data, bank statements, et cetera. They were probably a little bit too early for that, and it didn't get a lot of traction for that sole use case. But what they created was this concept of a financial locker, thus the term FinLocker. So the pivot that happened probably 3.5 or so years ago was to take this solution that was focused on a place or a point in the mortgage process and actually create a more holistic consumer financial health and well-being app that could benefit the mortgage industry in some unique ways. And so that's kind of where the company's gone since. What I was excited about in the seat that I had at most recently Flagstar Bank, as I was watching FinLocker and watching the roadmap, was, if you look at the landscape out there, there are large fintech lenders, some of which have raised a ton of capital. Others have gone public recently. We know the names, we know the brands. And there's been a massive race to get to the consumer first, get to the consumer up the funnel and get them engaged under your logo, with your brand, with your technology. And there wasn't a product or a company out there serving kind of the rest of the market, the mid-sized mortgage bankers, the IMBs, the smaller originators, even mortgage brokers, frankly, didn't have the same tools that these large fintech lenders had. And what FinLocker had on the roadmap was, the capability to bring to the mortgage industry their own version of Credit Karma or Mint.com. And that's really what we've been focused on, is bringing lenders an app, a consumer-facing financial health and well-being app under their logo, with their branding and in their tech stack, to help them engage consumers in an innovative, different way than just the traditional, marketing for mortgages. And there's just a ton of cool stuff that kind of spills off of that. We're super excited about the folks we're engaged with and the roadmap ahead. So it's been a fun almost 2-year ride at a fintech startup for a guy who spent almost 28 years in mortgage banking. So
we're going to talk about that in a second for sure, because I want to hear some stories about that conversion. A couple quick questions that come to mind. So do you view FinLocker as more of a consumer-facing tool, or one that is more on the client or enterprise side, or is it kind of homogenized? Talk to me a little bit about that.
Yeah, no, great question. It is definitely at its core consumer-facing. But when we talk about, Credit Karma and Mint.com, those are consumer-facing apps, but also their business model is consumer direct. They go direct to consumer. And let's just face it, in their models, the consumer's the product, and they bring all those consumers into their product. And on the other side of their product is this marketplace where lenders are acquiring leads, if you will, from those apps. We have all the same functionality. We kind of bring in, we bring in multiple pieces of tools like the Karma, like the Mint, like the Zillow, but we squish it all into one app. You like that technical term, squish?
I love it. True. You were born and raised technology guy for sure.
we bring it all into one app to almost create this financial super app experience. But our model is different in that it's one-on-one, meaning our client, the lender, it's their app. We publish it under their account in the App Store. It's their product. It's their branding on it. You get to look really down the screen to find powered by FinLocker. We're the Intuit inside, if you want to think of it that way.
Okay.
And then it empowers our clients, the lenders, to go direct to consumer using their brand, using their marketing resources, their reach to bring people into their funnel in a different way. So consumer facing, but on behalf of lenders.
Understood. One of the things I think you and I were talking about in a previous conversation that I'm real intrigued by, and boy, this week gets me even more intrigued with everything that's happening in the world that's impacting financial markets and consumers. Yeah. We're in North Carolina, so we haven't been able to get gas for the last 3 days.
Right.
And then you think about how the lack of the individually and collectively, whether we want to say government infrastructure or just me as a human being, are not prepared for these minor disruptions. And then also how municipalities, towns are impacted by lower credit scores, how one town is, compares to another. Are you starting to play in that space a little bit, where some of the data that you're collecting or the work that you're doing on the consumer side, and maybe I'm asking a question that's too far down the road, but where you could see value in more of a, almost a global health awareness of somebody's personal situation, not just mortgages, but how it impacts everything?
Yeah, I don't know that we've sought to solve the problems you just described, but what I will say is that we do have engagements with lenders and nonprofits, housing advocacy groups, et cetera, who are using the FinLocker product, again, under their logo, inside their tech stack, as a tool to lift a certain segment of the consumers that they engage with, whether those are low to moderate income folks or other underserved or underbanked or even unbanked consumers, helping them better understand kind of financial literacy, but also using a tool in conjunction with a relationship, whether it's a loan officer or a counselor, as I said, kind of this high touch relationship, but using this tool to help lift up and bring some level of equality, if you will, to consumers who otherwise have been somewhat ignored in the system. I think over time, and FinLockers, we're not the only ones doing that. There's a lot of great companies that are focused on that. But over time, as we in our industry kind of spend more time doing that, I do think it starts to have a grassroots effect in communities that have been kind of decimated otherwise.
No, I'm with you 100%. I know that, and we'll talk about this in a minute also, but you're heavily involved in some nonprofits. I have been locally as well. And when I think about a tool that you and FinLocker have built and continue to build, and other similar tools, the value that is represented, the gap that it helps fill, that unfortunately our public education has not done. Our children are taught, and me also, algebra and calculus, but I have no idea what the value of money is. I have no idea how to calculate net worth. I think these tools are wildly valuable. I'm curious to get your take on that balance between technology and the human touch, right? Like there's certainly some companies that are pushing, there's not going to be loan officers anymore. We're not going to need a human being. Where do you stand on that? Where is your head on that relationship?
Yeah, I think that as you think about let's just talk about the mortgage industry, and we'll hone in on like purchase business, right? folks that have been through the process, they've bought a home a few times, they've gone through the mortgage process, they're a little bit more, a little bit longer in the tooth, so to speak, or deeper in their life.
Right.
They're probably equipped, especially if they're salaried, kind of cookie cutter type, borrowers.
Mm-hmm.
They could probably do most everything on their own, not really need any counseling from a loan officer or a real estate professional. And there's some sliver of people that do that. That's their preference. I think as you go down the continuum, especially as you move towards the true first-time homebuyer segment, that's a group of consumers. This is the first time they're doing a meaningful financial transaction in their life, and they're touching both sides of their personal balance sheet. Mm-hmm. This is likely going to be the biggest asset they've ever acquired, and at the same time, it's going to be the biggest liability they've ever taken on. And so I think, and let's face it, the first-time homebuyer segment's generally made up of younger people, well, younger than us anyway, right. And they're much more comfortable doing as much as they can here. But what we still see is that they want to self-serve on what they can do and what they want to do, but they still want to be advised. They still want to have someone to use as a sounding board, especially in the process of buying a home and getting the financing for that. And so we kind of look at our product as assisting or maybe extending the work that a loan officer does or a real estate professional does with tech. And so again, we're not front and center. FinLocker is not a consumer known brand, but our technology can extend how many consumers a loan officer could work with in their pipeline. And then when that consumer is ready and needs that kind of face-to-face help from our app, they can, connect directly with their loan officer and engage there. So we think we can extend the reach of a loan officer by helping them engage maybe, another 10, 20, 30 people who are somewhere on the journey. They're just not quite ready, but they're in their app, getting themselves to a place of readiness. Hopefully that makes sense.
That makes total sense. And when it's something we think about a lot as our technology platforms help mortgage bankers, financial services, other verticals as well, but generally relationship-based sales verticals. The problem is time, right?
Yeah.
And so these tools solve that problem if adopted appropriately at some level by providing efficiencies. So I don't know that I've heard someone else describe their technology platform the way that you just did it. But I think that maybe one of the reasons why you did that is because you didn't come from technology. You're not a developer.
Right.
You weren't a Silicon Valley guy. Your whole career was supporting, for the most part, third-party originations for a few different companies and working with the individuals, the boots on the ground, right? That were building the relationships and then ultimately driving those opportunities and that revenue. Talk about that a little bit. I love that someone like you is at an organization like you're with, because I think there's value in understanding the other side of the equation because you've sat in that seat. How did you get into the mortgage industry? How'd that happen? I'm assuming I saw you went to Michigan State, and as far as I know, Michigan State doesn't have a mortgage banking 101 degree. So how'd that happen?
Yeah, well, I got in like everybody does in our industry. It was predestined. I graduated from high school and said I want to be a mortgage banker. Yeah, right. This is I love telling the story because it's like it brings back vivid memories. So graduated college, was already engaged to be married. My fiance or wife now was going to be a school teacher, so she was a substitute teacher at the time. I was working construction because frankly I was making more money, banging nails with a hammer than I would have been doing anything else. And my father-in-law was self-employed. He's an entrepreneur. He had his own business. And once we came back from our honeymoon, neither of us had permanent jobs, came back from our honeymoon and he said, look at a couple things. One, you got to find a place to live. And then two, you need to get a job with benefits. I'm like, what are benefits? I don't even know what you're talking about. And he quickly did the math for me on what it cost him as an entrepreneur, business owner to have his kids on his plan. So I quickly updated my LinkedIn account. Yeah, right. That didn't exist back then.
What?
I took my stack of resumes and just started driving in like a 10-mile radius and just papering businesses, right? And I got a call like 2 or 3 days later from one of the businesses that I dropped a resume off, a company called Fireman's Fund. And I remember driving by that building for my entire life, big old red helmet on it. And I'm like, oh, that's cool. We're going to this insurance company. Like, they call me back, go in for an interview, and it's a mortgage company. So Fireman's Fund was a big insurance company, but they had this little mortgage business underneath it. And I went in, did an interview, think it went well. They called me the next day and said, we like you. Can you come back in for a second interview? And if we like you, we'd like you to start tomorrow, like right after my interview. I'm like, oh, okay. And so I went into the second interview. They're like, okay, we want you to start. I literally started that day. And my first job, this is now in the mortgage business, day one was they gave me a stack of return messages. Remember how you used to write down, take your messages that way?
Right. Yeah.
And it had like 3 or 4 points of data: name, a phone number, a number with a percentage next to it. I had no idea. I knew what the name and the number was. I didn't know what that percentage was. And basically they said, sort these highest to lowest based on that number with the percentage symbol behind it. Call them back and ask them if we could give them 10%, are they interested? If they say yes, put it over here to the right. If they say no, throw it away. So I was basically doing lead conversion
Right.
for loan officers on a refinance book for Fireman's Fund. So stumbled into the business because I needed benefits. This would have been like 91-ish, 1991.
Okay.
The par rate for a mortgage was roughly 10.5%.
Right.
And then if you go back and look at the charts, you will see absolutely that was the high watermark, because we've been on this steady decline, right? So within like 6 months, rates had dipped below 10%, which opened up a huge refinance boom. And by virtue of timing, I went from being the third person in this group to a group that grew to 30. And so my 6 months of seniority qualified me to become a team leader. And it's been kind of an ascent from there. So not a very glamorous entrance, but it's fairly consistent with what I hear other people talk about how they got in the business.
Well, I love the fact that you walked in thinking, I think you said that you were going to be interviewing for something on the insurance side. And then before you know it, you're a mortgage banker. So maybe
That's right.
Maybe it was predestined. The other thing I love is that when you giving me memories of how we used to manage call sheets and that percentage that you were seeing, that was your introduction to algorithms, was it not?
Yeah, that's it. That's right.
So who knew that would serve you well on the software, on the technology side at some point?
Yeah.
So you ascend, you eventually become the head of TPO at Flagstar. From that point to the point before you left Flagstar to go to FinLocker. And I know your time at Flagstar was super positive. So I just want to be very clear with anybody listening. That was not for any negative reasons. It was all positive. Were there some moments along the way that you remember that stand out in your mind where you thought to yourself, what am I doing? Or is this industry right for me? I mean, sometimes those successes of kind of failures or wondering if you're going to turn the next corner, tell me about one of those if you can think of one.
Well, there was a bunch, because our business is cyclical. So you're feeling good about yourself, you're feeling bad about yourself, and if you go back and look at the charts, it generally follows the market.
Right.
There's one in particular, and I think this will resonate with you. July 8th, 2008. It's a Saturday. I'm in Cooperstown, New York, at a baseball tournament for one of my kids, and my cell phone rings, and it's my boss, and he says, I was running correspondent sales for IndyMac Bank.
Okay.
And he calls and says, I need you to get the team on a call this afternoon. I'm like, it's Saturday. He's like, yeah, I know. And, so I put out the bat call, we got people on a call, and we effectively, closed down our correspondent business. And so that, you go from this, and it wasn't like it happened overnight. We knew there was things happening at IndyMac. There was things happening kind of in the economy and the industry. But you still never thought it was going to happen to you. Right. And we literally, got seized by the FDIC. The bank was seized. We had a good old fashioned run on the bank. IndyMac had a small banking footprint pretty much in LA County. And, people's grandmothers were lined up on a Friday morning getting their money out of the bank. And we can thank probably one of our esteemed senators. I won't name names here, but there was a senator that still exists that was pretty vocal on, a network news saying, if my little old grandmother had money in these banks, like IndyMac, I would tell her to go tomorrow and get it out. Well, that was it. We had to run.
Wow.
So I went from, being at a great company, and it was a great culture, we were doing great things, to being impacted, kind of being caught in this, economic swirl, this industry event. None of our faults individually or even as a department, just it happened, to now spending the next kind of 10 months figuring out what do I do next, right? Because I was done. It was over. We were, as of that Monday morning, employment ended.
Right. Did you have a thought for even a second that maybe I'm going to go do something else? I'm not even going to be in this industry anymore.
I did. Yeah. I mean, I at that time, especially because, that was the beginning of what became a really bad cycle in real estate and mortgage, especially. And I did. And I looked at some other opportunities. What I did initially was, partnered with another colleague from IndyMac, and we just built a little consultant business. And basically, we had a lot of contacts in and around the industry, and we went and started helping some of the servicers who had all these assets, starting to do some disposition work. So that was cool because it gave me I'd never been on that side of the business, but I was still squarely in mortgage.
Right.
And over that time, we were working on a couple other deals, trying to put together, whether it was putting together a bank with a servicer, with a mortgage company. And I kind of got, I wasn't leaving the business at that point. I was all in. It's what I knew. It's where all my business relationships were. And so, for a couple of years, probably 3 years, I did a couple different things. Probably went to companies I never would have thought I'd have gone to, really small places. But all along the way, what was great for me, cool for me, and I look back and I still find value, is I learned something new in every one of those places, whether it was from the people at the company or the role I was in. And so what I try to tell people is, it's grim. As grim as it is, you got to go do something, and you got to figure out how to make the best of it, and use it to learn, use it to better yourself. And as I got to this place towards the end of my tenure at Flagstar, and you nailed it, I would not have left Flagstar to go to any other lender. I felt like, and I still feel like, I had one of the best top 3 jobs in TPO at Flagstar Bank. People there are phenomenal. The leadership there is fantastic. Great culture. We did great things. But I got to a place, I was 50, 51, and I had kind of taken the corporate safe route kind of through my life, and I never made a bet on myself. And I'd seen enough entrepreneurs who've started up mortgage companies and done great things, and I know it's not easy, and I knew it wasn't easy. And for me, where I was in my life prior, where my kids were, we just couldn't take a chance, right? I had to take that path of consistent kind of safety, if you will. And at 51, for the most part, my kids were off the payroll. They're never really off, but they were off.
Don't say that. Please tell me that they come off the payroll at some point.
Yeah, I'm still working on that. But I got to that place where I felt like at 50, 51, I could go take a chance. I could make a bet on myself, and I found a horse that I thought I could win a race with as well in Finlocker. And worst case, if it didn't work out, at 55, I could go probably find a job, writing mortgages somewhere. So, I had always had that itch to do something more entrepreneurial. Finlocker has given me that opportunity. It's fun to challenge yourself. Every day you have good days and bad days in the startup world. Thankfully, there's more good days than bad days. But again, I'm kind of still learning about myself, what I'm capable of, and it's been fun. It's been energizing.
Yeah, and in reality, right, there's good days and bad days with every job. I don't care how stable you think it is. I do think that, and I can, I can relate. Maybe the risk is a little greater. Maybe the pressure feels a little different when you are an entrepreneur, when you have skin in the game. When you're still proving concept and constantly proving concept, especially in software that you never end. You're constantly adding features and listening to your customers. But I think the story that you just told, and the takeaway is the bet on yourself kind of mentality. Whether you're a loan officer that's in a bank environment and you'd like the opportunity to make a little bit more money, or you'd like the opportunity to have a little more control. The risk in that is that to get that, you have to bet on yourself, but because you're going to be moving to something that probably pays you less of a fixed income, but a greater opportunity to build a book of business that's transferable, that you own, that's relationship based, but there's risk. And so I wonder, when you were going through that, I'm curious the percentage of people that you consulted with, because I'm sure you talked to some people before you made the move.
Oh yeah.
Probably your wife, probably friends and associates that you've done business with. What was the percentage of people that said, hell yeah, man, bet on yourself and go do this, versus the ones that said, are you crazy? Just work 5 more years and you've got your retirement built up and you can do whatever you want to do?
Yeah, I'd say 95% were in the camp of absolutely, you put a bet on yourself. And in most cases, most of those people didn't know Finlocker from anybody, right? So it was more about, you got to do this. By you vocalizing that this is what you want to do, you will regret it if you don't do it, right? Whatever it is. And so I had unbelievable support based on my experience and relationships in our industry, in the mortgage industry, which that's where Finlocker is been focused on, is serving the mortgage industry. I talked to dozens of trusted clients, friends in the industry, and they all conceptually loved what the concept of Finlocker was at the time and where it's gone, and said, yeah, this is needed, and you could do this, right? So unbelievable support. And here at home, it was, I think my wife's seen me go through 28 years of kind of, I'll call it the corporate grind. It is what it is. But and she's like, you got the bug. You've been talking about it even before it was in my head. I was already talking about this Finlocker thing like a year before I made the move. And so she's been very supportive up until the point where she realized this was going to be a Brian works from home job, and she's like, "Whoa, you're now all of a sudden I'm in her space." So there's a little bit of adjusting there, but yeah, it's unbelievable support from all parts. And what was super cool was when I talked to my boss at the time at Flagstar, Christy Furco. She, at first was like, oh man, because she was relatively new to Flagstar at the time, but she even became a huge advocate for me, for my decision. And so I had all the way up to Sandro Danello, the CEO, Lee Smith, the COO at Flagstar. Everybody was super supportive because they knew this wasn't about me leaving Flagstar. This is about me trying something new, making a bet on myself, and they were all about that. So yeah, I had great support.
You know, one of the things I worry about with, I don't know how old your kids are, but I've got a 21-year-old and an 18-year-old, both boys. And they're like everybody's kids. They're so wildly different. I don't know how they came from the same people, but nonetheless, they're both great kids. They're going to be successful. And I worry about them as a parent, but I don't worry about them so much.
Yeah.
But I do notice that their brains are wired differently, and they don't seem to be geared in a way that I think makes them comfortable asking potential mentors for advice. And I worry about that going forward, because I think what you just described was that, you know, you had built up a proof of concept with your relationship. So you knew that you could go to them, and those relationships built up enough proof of concept with you that when you told them something with excitement and passion, it didn't matter to them whether it was FinLocker or XYZ. If this is something you feel this way about, man, it's time for you to go do it. I think I love hearing you talk about the value of those relationships and communicating with those relationships. I think that's very much a mortgage banking thing also. You know, it's an industry that's very much based around, for the most part, I know that consumer direct and is growing, but there's still relationships that have transferable books of business. Yes. And I can remember years ago working with someone that was thinking about taking this, back in the day when joint ventures were big. They were running joint ventures for a large company, and they were thinking about changing to another company. And they came to me and said, I don't know how to make this decision because I don't know if my relationships will follow me. Like, I don't know for sure. Yeah. And I said, I want you to pick out one that you trust, that you know will keep this confidential, but that you trust them, and just tell them and see what they say. But I'm going to tell you, their answer has less to do with the opportunity and more to do with you.
Right.
And so she went and asked the question, and their answer was, I don't like the idea of change. That makes me uncomfortable. However, if you think this creates more value for me and our business relationship, go do it.
Right. Love it.
And I think that's kind of a similar example to what you described.
Yeah. And you, I think I never thought of this before, but your point on our kids not having those mentors, that I think that's real. I do think it's real. And I think it's been exaggerated, accelerated, whatever you want to call, through pandemic. Right.
Sure.
And so, you know, I think we need to think about, and this is something we talk about as a company, because we're a younger company, except for myself and some of our other guys. We've got a lot of young developers that, and so we try to be purposeful and conscious and intentional about how we engage with our teams to help them in a way that we were helped kind of coming up through our professional lives. And I think you're right. I think that may be something that just, I don't know if it's generational or what, but it's interesting. It'll be interesting to kind of watch how these kids kind of maneuver and make moves in their careers.
It's this. I mean, I know what it is. And you and I both are involved in technology platforms. So of course we see the value and the efficiencies that technology can create for individuals, consumers, companies, but there's a rewiring that's happening. I don't know that it's a horrible thing. It's just different. It's just different now. So where are they going to get that advice? Let's kind of transition and maybe close out a little bit, because I think it's a good segue. I know you do some nonprofit work that's involved in a boxing facility or program, and I'm going to guess that there's some mentorship that's happening within that program as well. Tell me a little bit about that. I love to hear about the things that give people juice to help them be better at what they do in their day job. Talk a little bit about that one.
Yeah, I love it. So I'm on the board at the downtown boxing gym. It's a Detroit program, and people get excited right away when they hear boxing. Oh, that's so cool, you know. So I'll start by saying our motto is books before boxing. Okay. So our founder, a guy named Kali Sweeney, Kali was basically at a point in his life when he was young, in his late teens, going into his early 20s, where he looked around his neighborhood, including his family, and basically said, as a young African American in the city of Detroit, he saw two paths for his future. One path led to prison, one path led to death. That's what he had seen from his peers, including family members. Khalid couldn't read. He was illiterate, and was just kind of working odd jobs and just kind of grinding it out on the streets of Detroit as a young man. And he got lucky and had a neighborhood gentleman bring him in and mentor him. And the hook, what Kali was just going out there and busting knuckles, right? And this guy said, "Oh, you want to be a fighter? Cool. I'll teach you how to fight, how to really fight. But there's a trade-off. The cost of me teaching you how to fight is you need to learn how to read." And Kali's like, "I don't know about that." He's like, "Come in, let's do it. I'll put you through some training." So he did the training and he was hooked. He's like, I want to learn how to fight. And then gradually accepted that he had to pay his dues, which was he needed to learn how to read.
Right.
And he did. He learned to read. He got his GED, and it empowered him in ways he never thought he would be empowered. It opened up a world to him that he never knew existed. Words on a page opened up a world he didn't know existed. And he made a decision at an early point in his life, like his mid-20s, that he was meant to do what this gentleman did for him for his neighborhood kids. Mm-hmm. And so he started with a small little old rundown car wash that they converted into a little gym. It had enough room to put a ring in it, and the business model was the same. I'll teach you how to fight, but you have to pay me back by learning how to read, or whatever that education help was going to be. So fast forward to today, that was like, I don't know, 13, 14, 15 years ago. Fast forward today, we have a large facility in Detroit. We have 150 kids in our program. We have a 100% graduation rate. We take kids as early as 8 years old, and then we graduate them from high school and send them mostly to college, but some go to vocational and trade schools and do other things. But the hook is boxing. And Kali tells a great story. You know, you've got these kids in the neighborhood and they're running with the wrong people. And if these kids were to tell their friends, their neighborhood friends, "Oh, after school, I've got to go to tutoring," they'd probably get their butt kicked. Mm-hmm. But instead they can say, "I got to go to boxing today." And again, it's books before boxing. They come into our facility we pick them up. That's the other thing that's cool, is we have multiple vans. We have a big bus that was just donated to the program, and we go out and pick up kids from all across the city after school, bring them in. They do a pretty rigorous educational program. Whatever they're need help in, we take them through all that. They have about 40 minutes of their afternoon that's spent in the gym. We feed them. They get a full warm meal, and then we deliver them back to their porch, their doorstep, right back home at 7:30. And so we're not only helping that education in lifting them up there, we're giving them a safe place to go after school because their parents are working. And then most importantly, we're wrapping that around safe transportation. So it's a unique model. It's all about literacy and helping kids advance educationally. And boxing's about this much of the story, but it's enough to get people talking about it, and and it hooks the kids in.
My gosh, man, I've got so many questions, but we'd have to do another podcast, which maybe we will.
Well, here's what I'll offer up. If you really want to learn,
yep,
we could have Kali join, and you could get his story directly, because it's unbelievable.
Make it happen. I'm in.
Yeah.
Like I'm in right now. I would love that. Because I'd love to hear you and I mean, I've been involved in nonprofits. Look, man, some of the hardest transportation is one of the hardest things.
Yeah.
I haven't been able to solve for that on some things in our local community. you guys have pulled it off. But what an incredible story. And what a reminder of the stuff that we all complain about on a daily basis. Come on. That's a special story. I understand why that probably gives you a lot of passion and energy to go be good at what you do in your day job, so that you can then deliver some of that energy back to others that need it the most. So thanks for that story. That's awesome. I think it's a great place for us to draw the line on this one. But yeah, man, get us introduced, and maybe you jump in on that one as well, and we can do another one and talk a little bit about the program. I would love it.
Would love to. Yeah.
And look, thanks for coming on. If there's anything that I or we can do for you in the future, please ask. Brian Vieaux, FinLocker, industry vet, all around killer dude, not afraid to wear a hoodie to work now. I love it. Thanks for joining us on the walk. I appreciate it. This was really great.
Yeah, thank you. This was a blast. Thanks for having me.
Bud. Appreciate it. We'll talk soon.
All right, thanks.